I welcome all the viewers to this webinar, which is organized on hospitality sector, where we are going to cover today the restaurant services, the catering services, as well as the hotel services. This is an area which impacts almost all the businessmen. They are incurring some expenses on this type of activity, and they are also paying GST on that. So, how much GST to be charged by this type of organizations and how much to be paid? All these points will be discussed by today's two faculties, CA Umang Talati and CA Manish Raj Dhanaria. Both the learned speaker have thorough knowledge about the GST, and we also have with us Vice Chairman of GST and Indirect Tax Committee, Institute of Chartered Accountant, CA Rajendra Kumar GP, who served as a chairman of this committee in the previous years. And I welcome all these, both the faculties as well as the Rajendra ji to this webinar. And let me once again remind all our viewers who is regularly taking part in this, you have option to type your queries, and our faculties will definitely try to take the queries at towards the end of the session. And even if you feel that some topics to be covered in the coming webinars, you can always type in this chat box only, where we are taking the questions. In the same chat box, you can post your queries, so it will be handled in coming months. Next webinar is not yet decided, but we are waiting. Although the circulars related to GST Council recommendation has been announced, so next webinar we may do on this, on the circular issued on the basis of GST recommendations, GST Council recommendations. There are amendments which will be seen in the Finance Bill 2024, and there are amendments which will come through notification. These all are awaited, so we are not going to discuss on all this. Only the 16 circular which are announced on 26th of June 2024 we are going to cover in the next webinar. So the viewers should always be attentive to our announcements. And before we invite both the speakers, I am requesting CA Rajendra Kumar GP, Vice Chairman of this committee, to address the audience as well as welcome the speakers formally. But before that, I see a very lovely face on the screen, CA Umesh Sharma. He was Vice Chairman to this committee in the previous year. He is serving third year in the council. This year he decided to serve other critical area of ICI. All of you are aware that few days back we have launched our chat GPT in ICAI. And Umesh ji is the person behind this. So before Umesh ji speak about the initiative he is taking, I am requesting Rajendra Kumar GP to take this in today's webinar ahead.
Thank you, very esteemed Chairman Sushil Goyal ji, my very esteemed friend and the former Vice Chairman, under whose very informed guidance we had a wonderful year for the ICI on the GST committee, and our mentored by Sushil Goyal ji, our permanent chairman. Esteemed friends, it is really a great and delightful experience to be with you again, once again. Week after week, we are coming to you with unique topics. Week after week, we are coming to you with experts on this subject. And week after week, all of us are gaining knowledge and scaling new heights. Today, we are going to hear two very esteemed faculties, Umang Talati ji and Manish Raj ji. Esteemed friends, the topic of our discussion today is GST on hospitality sector. In fact, it's a very wide sector. But our faculties are restricting their presentations on hotels, on restaurant services, and on outdoor catering. Because these three occupy primarily more than about 75% of the hospitality sector. We have been receiving numerous queries and requests, and here these faculties are there. In fact, just few days before, we had a 2 days training program for the Mangalore state GST officers. We had Umang Talati speaking to them, to the Mangalore state GST officers on the very same topic which we are discussing today. And what a hit it was. Inspired by that, we invited him today to this seminar. And friends, let me also tell you that we are planning numerous such programs in the coming weeks. Week after week, we are going to churn out for you excellent topics. And to those of you who are here, and to those of you who can travel to Chennai, on the August 30th and 31st, we are going to have 2 days national conference exclusively on GST with the giants and the who's who of the GST world. The details of registration are available on the GST website, and those of you who are interested to discover the South, you're most welcome to contact me also. The faculties of the day are very esteemed. The faculties are experts for more than a decade. They are in the world of indirect taxes, and specifically in GST from 2017 onwards. They have contributed immensely, I must tell you, in the GST world. In fact, Manish ji is our member on this committee. This year, he's been rendering human services. And Umang ji, in fact, he has an international exposure in his studies, also having studied from the University of California, if I'm not wrong. So, friends, with these brief opening remarks, may I request our very prolific and a person whom we know as a smart man, the former vice chairman, whose deep interest in GST is known to all of us. I request him to please speak a few words, greet us, and greet the members, and then hand over to these faculties. Thank you, sir.
Thank you. My first chairman, when I joined the council, it was the first year, and first chairman was Rajendra Kumar sir under GST. GST is my passion subject, everybody know. And then in the second year, I had very good opportunity, and I was fortunate to have a chairman, Sushil Goyal sir, and both two chairmen are there. So interestingly, I am the small SGST and they are central GST and IGST persons. So it is always happy to be there in GST sessions, and whenever we think about the GST webinar, it's always thing that I remember the old golden days when Rajendra Kumar sir and Sushil sir and everybody were there, and I was the vice chairman and working hand to hand to have such webinars. And I am very happy that this committee is organizing one of the complex, one of the most sought out subject, that is hospitality. And we have speakers Manish ji and Umang. Umang is a second generation chartered accountant, and we are very good friend. His father Rajat Talati sir is also, and Dawal Talati, his uncle, all are in indirect tax experts. And it's a good moment that he is leading the show. And friends, at the end, please go through the ICI CA GPT, where we have our official GPT of GST committee also, and give your feedback. It's a beta version launched, and thanking Rajendra Kumar sir for popping me in the camera and sharing my views. Thank you and happy learning.
Thank you very much, Sri Umesh Sharma ji. And now, what are you waiting for? Over to you, speakers. Who's going to be the first?
Manish ji will be starting. Manish ji.
Yeah, I'll be starting, sir.
Yes, over to you. Thank you.
Thank you so much, Chairman, sir, and Vice Chairman, Sir Sushil Goyal ji and Rajendra ji, and also Umesh ji for inviting me to this seminar of IDT committee. So already the stage has been set by you all. So I'm taking forward from here. So for today's topic is hospitality, GST in hospitality sector, and I will be covering catering services and the restaurant services. So I'm sharing the screen. So agenda for the session today we'll be discussing the background of restaurant and catering services, where we'll be discussing the meaning of it. And then we'll be discussing taxability of restaurant services. And there are certain specific issues in case of restaurant, because when we talk about the restaurant currently, there are some cloud kitchen also, ice cream parlor also, and there are franchisee models also, and lounge facilities in the airport. So lots of other issues are there in the which are related to restaurant sector. And then we'll be discussing taxability of catering services. And whenever we talk about restaurant and catering, one business more comes to the mind, that is sweet sale, because most of the businessmen, those who are providing restaurant services and catering services, they also have sweet shop. If we not talk about the five-star category restaurant, then in mediocre category, there is always a sweet shop attached with the restaurant. So let us first start with the background of restaurant and catering services. Whenever we say restaurant catering, both these services includes the element of goods as well as services. So first the question arises whether it will be treated as supply of goods or supply of services. And this part has been taken care in Schedule 2, where it is made very clear that in this case, in the case of restaurant and outdoor catering, it will be treated as supply of services. In most of the cases, many things that this particular entry is with respect to only restaurant, but that is not the case. If we read the entry, paragraph 6, point B, supply by way of or as part of any service or any other manner whatsoever of goods, being food or any other article for human consumption. So this will cover both restaurant as well as the outdoor catering. Initially, restaurant and outdoor catering were not defined in the GST law, but later on, its definition were given in the rate notification. We'll come to that. But one more important thing in this here, it is mentioned other than alcohol for human consumption, because Constitution itself doesn't give power to levy GST on alcohol for human consumption. As per Article 366(12)(a), it is outside the scope of GST, and Section 9 also prohibits, because we can't levy GST on alcohol for human consumption. So this entries for both restaurant as well as outdoor catering. If we see the definition over here, which is given in the rate notification, we can see the initial two lines which are marked with blue. Both are same as it is mentioned in the Schedule 2. Later on, the difference that they have differentiated restaurant and outdoor catering by way of where the service is being provided. If it is provided in exhibition hall, conferences, marriage halls, it is outdoor catering. And if it is event based and occasional in nature, then it is outdoor catering. But if it is provided by restaurant, eating joint, including mess, canteen, then it is a restaurant services. One very interesting thing, that this definition was included with effect from 1st 1/10/2019. Before this definition was not there in the GST law. And when we read the law, before 1/10/2019, it was required more the differentiation between restaurant services and outdoor catering services. Because currently, when we'll go into the rate and the taxability of restaurant services and outdoor catering services, we'll found as on today, restaurant services and outdoor catering services are almost 100% same. Taxability is 100% same, but previously there were different rates for restaurant services and outdoor catering. And at that time, it was very important to have the exact definition of restaurant services and outdoor catering, which was not there previously and later on inserted from 1/10/2019. And after that, it was not much required because the taxability is same after that. So if we come to the taxability of restaurant services in GST, it started with 18% GST rate in case of air-conditioned restaurants and also where liquor was served. And if it is a non-AC area, it is a non-AC restaurant where the liquor is not served, the GST rate was 12%. And these rates were when we can take the benefit of ITC. So this rate was from 1st July 2017 to 14th November 2017. Thereafter, the rates changed to 5% in case of restaurants, normal restaurants. But if restaurants are in specified premises, rate was still 18%. And specified premises means the hotel where the unit accommodation rate, declared tariff of the unit accommodation rate was 7,000 per unit per day or more. So in that case, there was 18% with ITC and restaurant in all other sector was 5% without ITC. So interestingly, ideally we can see the rates were reduced, but here in many cases, restaurant increased their prices and lots of anti-profiteering cases were also going on. If we see the anti-profiteering cases, mostly the cases were on this particular sector, this restaurant sector like KFC, Domino's, in all these cases, there were lots of anti-profiteering cases because they increased the prices in many cases. Now, when the question was asked why the prices have increased when the GST rate was reduced, their argument was that previously they used to get ITC and now they are not getting the ITC and that is increasing the cost. In this analysis, we can also say that it means if now the GST rate is 5% without ITC, it means 5% they have to pay in cash. Then it means previously they were paying the taxes in cash less than 5%. That's why they are saying that now the ITC is becoming their cost and the cost has increased. So they increase the prices also. So this was the case because in many cases, restaurants are always on the rented premises and rent is always a huge cost and that involves huge ITC at the rate of 18%. Moreover, in case of franchisee model, because nowadays lots of franchisee businesses going in food chain like KFC, Domino's and all, they charge franchisee fee also. And in franchisee fee also, GST rate is 18%. So there was huge ITC involved. And that's why they said the outflow of the cash for the tax payment was less than 5%. And that's why they had to increase the cost of their food products. So now if we come to the place of supply of restaurant services, because place of supply is important to determine the taxability, whether it will be in the form of intrastate supply or interstate supply. So in case of restaurant catering, if we see in both the cases, almost place of supply is same. The place of supply is the location where the services are actually performed. But if we see from the restaurant supplier point of view, he have to charge as an intrastate supply, he have to charge CGST and SGST. He can't charge IGST. But if we talk from the recipient point of view, it hardly matters to him because even if it is charged C and S or the supplier charges, it doesn't matter because in any case, ITC is always blocked in case of the recipient. Recipient will not get ITC at all. So for them, it is irrelevant whether they charge C and S or IGST. But for the supplier, it is definitely relevant whether they charge C and S or IGST. Okay, so now we come to the next part, that is value of supply. So value of supply is very simple over here. It will be if the parties are not related, then the transaction value will be the value of supply. But there are certain cases over here we can see, especially in Domino's, we find that there is free pizza. There is free pizza given. How this free pizza is given? There are two ways they give the free pizza. One is by way of the accumulated points. They have some model that if you buy a pizza of rupees 350 or more, you get 100 points. And if you accumulate 600 points, you can redeem those points for the free pizza. There is one more possibility that you have some vouchers of any credit card, any banks and all, and you can use those vouchers to get the free pizza. But truly speaking, is actually this pizza free? So should the value of supply be zero? Obviously not. Here the value of supply will not be zero. If in any case, if previously, if you have redeemed the points to avail the benefit of free pizza, you can see the invoice. What they actually do, they will charge the cost of the pizza as usual. Say, for example, if pizza is costing 400 rupees and 5% is the GST on that, so it's total coming 420 rupees. And out of those 420, what will they do? They will take your points as the consideration and they will redeem the points and then they will give you the pizza. It means they are taking price of the pizza in the form of the loyalty points that you have accumulated in your wallet. So what happens initially when we purchase the pizza, we are getting some, you can say, commercial credit note in the form of the points, and those commercial credit notes are being redeemed to give the pizza free of cost. It seems like that it is free of cost, but actually it is not free of cost. You can say you are getting the discount gradually on different pizza, and those discounts were accumulated, and now you are redeeming, you are using those discounts in the form of loyalty points to get the pizza. And one more very important thing, you can see over there, asterisk is put over near the free. What does it mean? What they say, they will redeem these points against the cost of the pizza, but they will take cash for the GST portion. It's quite logical also. Otherwise, their cash flow will be disturbed because the GST that they are paying is from cash resources. So that's why whenever they are supplying free pizza, they will ask the GST portion in cash. That's why the asterisk is put over here. So value of supply even in case of free pizza is not zero. It is as usual like any other pizza, but they are redeeming it from the points that have been accumulated in your account. So value of supply is very simple. It's like any other value of supply. Now, if we some sector specific peculiarities, the one is the supply of alcohol, liquor for the human consumption. Now, if any restaurant, especially if I say 5-star restaurant, those who are in the specified premises where the room tariff, declared tariff is more than 7,500, there they can get the ITC. Okay. So now if they are also supplying liquor for human consumption, now this supply of liquor for human consumption is a non-taxable supply. We can see in section 2, subsection 78 of CGST Act, because GST is not charged in that. So it's a non-taxable supply. And if we read the exempt supply section 2, subsection 47, there it is specifically mentioned that exempt supply will always include non-taxable supply. So from GST point of view, we can say that liquor for human consumption is an exempt supply. And if any organization is supplying goods which is taxable as well as exempted, then they have to reverse the common credit. So whatever is the common credit in the specified premises, that has to be reversed in the proportion of exempt supply to the total supply, and the supply with respect to human alcohol for human consumption will be exempted, and in that proportion we have to reverse the common ITC. This case was also taken by West Bengal Advanced Ruling Authority, Kandani F&B Specialties, where the applicant argued that since alcohol is out of GST, so it shouldn't be considered directly or indirectly for any GST calculation purpose. So there should not be any reversal of common ITC. But this argument was not accepted by the bench, and the bench said that yes, it is outside the GST. It means you will be not paying any output tax on this. And if we are not paying any output tax on any supply, definitely we can't claim the ITC with respect to that. So definitely we have to reverse the common ITC part. So this was the final decision given by the West Bengal Advanced Authority Bank. And it's quite logical also that if we are supplying human alcohol for human consumption, then definitely we should reverse the common ITC. Okay. Now, there are certain other areas in case of restaurants, like first of all, restaurant under the franchisee model. We can take any example like Domino's. If any store is there in your local locality, that might be a franchisee model, and the main company, the principal is providing them the materials and all, and then that local store is selling the goods to the consumers. Now, the local store definitely is the restaurant. So all the provision of restaurant will be applicable for that. It means the local store will charge 5% GST without claiming any ITC. But here there is one leg of transaction mode, that is between the local store and the principal, the licensor, the company which gave the license to operate the franchisee. Now, the company, like in case of Domino's, is Jubilant Food. So Jubilant Food is giving the license to the local store, and for that, definitely Jubilant Food is charging some franchisee fee. And on this franchisee fee, GST rate will be 18%, which will be paid by the local store to the principal, and then principal will pay to the government. But in this case, the local store will not get any ITC of this franchising, of this taxes paid on the franchisee fee. So this will become the cost for the local store. One more important thing, that this local store will purchase materials from the Domino's main principal, because they always stick to the main discipline. You have to purchase all the materials and ingredients from the principal itself. Now, when principal is supplying materials to this local store, there can be two possibilities. One is that that local store is the franchisee, and there is one more possibility, that local store is one of the unit of the principal only. Okay, so in case local store is a franchisee, then we can safely assume that local store is unrelated person, and at whatever price Domino's principal office is charging to the local store, the prices for the material, that will be supplied with the normal GST rate. Mind it, for the principal, when they are supplying food materials to the local store, that is not the restaurant services, because they are not serving anyone to the consumer. They are selling the products, they are selling the materials to their franchisee. Okay, so for them, there will be normal GST rate. And if both the parties are unrelated, whatever price is being charged by the principal to the local store, that price will be considered for the GST purpose also. But if the local store is one of the own shop of the main company, then here comes the rule, because now the local store, the local Domino's store will not get the ITC. So in that case, the principal company, the main company, can't charge any price to the local store. Company have to consider the open market value. The reason being, Rule 28, sub rule 1 ka second proviso will not be applicable over here. The reason being, the recipient is not eligible for full ITC. So they have to consider the open market value for transferring the materials from main company to the franchise. So this is a very important point that needs to be considered in case of all franchisee model. Otherwise, they can save taxes, because in any case in the local store, the ITC will be blocked. And if they are from the same company, they can transfer the material at a lower price to save the loss of ITC. But they can't do so because of Rule 28, sub rule 1. Okay. So this is the restaurant under franchisee model. Next comes ice cream parlor. So there were lots of confusion regarding ice cream parlor, and later on a circular number 164 came, which cleared that ice cream parlor, when supplies ice cream, it will be treated as a separate service. It will not be treated as restaurant services, and GST rate of 18% will be applicable for them. They will charge GST at the rate of 18%, and definitely they will claim the ITC of whatever material, whatever the ice cream they are purchasing. So this clarification was made by way of circular number 164. Now a question came, if it is a circular, then it should have a retrospective effect. So what will happen to those dealers, those taxpayers who have already charged the tax rate of 5%, assuming it as a restaurant services? So that has also been taken care. Later on, one more circular was issued where it was made clear whatever have been done till now, that will be accepted. But from now onward, ice cream parlor should be treated as not as a restaurant services, and the GST rate of 18% is to be charged on sale of ice cream. So this matter was clear. Later on, a case was also came in case of ice cream parlor, where suppose restaurant is providing ice cream. Now there can be two possibility over here. A consumer is having ice cream together with the food, and second case may be a consumer is taking away the ice cream. Now the advanced ruling that is in the separate slide, this one, in case of HRPL Restaurant Private Limited, here the bench said, Gujarat bench said, if the ice cream is supplied with the food, then it will be treated as composite supply and its taxability will be as per the restaurant services. But if ice cream is sold separately, then in that case, it should be treated as like an ice cream parlor and GST rate should be 18%. But I don't accept this view. As per my view, even if it is a restaurant, whatever, even if it is a takeaway or consumption over there, it should be treated as restaurant services because in many cases, like cake shop, pastries and all, over there GST rate is 18%. But if it is a restaurant, even if you take away from there, the GST rate should be that of restaurant services. So let's see what happens ahead, because right now the advanced ruling bench said it should be treated as ice cream parlor. Now the next point is cloud kitchen. For this also circular number 164 was issued. In that it made it clear that cloud kitchen will also be treated like a restaurants, and the GST rate will be normal 5% without ITC. So it will be treated like a restaurant only. Next is airport lounges. Now the airport lounges, as we all see. Now what is the basic purpose of airport lounges? Two answers might come in our mind. One is we are using airport lounges for waiting area facility. And second is airport lounges can also be used for the refreshment because we can have food and beverages over there. So again, there is a confusion. What supply we should treat it in the airport lounges as a accommodation services or food and beverages services. So considering that airport lounges is in the airport, and when there is a delay in the flight or there is time left, we go to the lounge. So primarily it should be treated like a waiting area facility where food and beverages is also served. So in airport lounges, the principal supply, we should treat it like a waiting area facility. And if it is waiting area, then under SSC code 99673, accommodation services, accordingly GST rate of 18% will be charged. And here place of supply will also be the location of immovable property. It means where the lounge is located. So in this case also, mostly we'll see that the supply will always be intrastate. The reason being supplier is registered. Definitely the supplier will be registered in the state where our airport lounge is there. And place of supply will also be the same state. So in this case, there will be intrastate supply. Now a question comes, in airport lounges, they are also serving food and beverages. So if they are serving food and beverages, definitely they are purchasing also either raw material or ready cans and water bottles and lots of cold drink juices. They are also purchasing the same. So whether airport lounge will get the credit of the food and beverages they have purchased. So this is the question. We'll deal this question later on. I have a separate slide on this. But right now I can say only this. Airport lounges will get the ITC of food and beverages. But a question might come to the viewers that in case of food and beverages, it is blocked under section 17, subsection 5. So we'll be taking care after a few slides. Now, the next point is food and beverages on board flights. In this case also, there is a confusion whether it should be treated like a restaurant services or the residual category services in 996335 in food and beverages. So if we see the definition of restaurant services, food and beverages on board will not qualify for the restaurant services. So ideally what the airlines are also doing right now, they are charging GST at the rate of 18% in the SSC code of 996335. That is the residual category in case of food item. They are charging GST at the rate of 18%, and definitely they must be taking the ITC of whatever purchases they are making. And as per my view also, this is the right treatment. They can proceed with this. Now, the next point is food and beverages in case of movie theater. For this also, a circular was issued by the government, by the GST Council, where they made it clear that food and beverages provided in the theaters will be treated like a restaurant services, and they will charge GST at the rate of 5% and will not get any ITC on the same. So, for in case of movie theater also, it will be treated like a restaurant services. Next, this case law advanced ruling we covered, which is with respect to ice cream sold in the restaurants. Next is, this is Kundan Mr. Yeah, this is also very interesting ruling. As we all know, as I discussed also, in most of the restaurant, mainly in the case of middle sector, they have a restaurant also, and they also have the sweet sales, sweet shop. And especially in Bengal, there are lots of sweet shops over here. So in case of sweets, GST rate is 5% and full ITC is available. So suppose if there is any restaurant with sweet sales shop, so what will happen? Because in case of restaurant, they will not be eligible for the ITC. But in case of sweet sale, they are eligible for ITC. And one more important thing, the main ingredients, main material they use for the restaurant and sweet sale, most of them are common. So how to manage this? Look, if they are maintaining both sweet shop and the restaurant in the same premises, it is not demarcated. And if separate accounts are not maintained, then definitely sweet sale will also be treated as part of the restaurant and ITC will be blocked. But obviously taxpayers don't do this. If they are having a significant sweet sale business, they will demarcate the area of sweet shop and the restaurant. Only demarcation of area will not serve the purpose. They have to maintain separate records of all expenses and revenue so that they can claim the ITC with respect to materials used in the sweet shop, and obviously material used in the restaurants will be ITC in that will be blocked. They can't take the ITC. So if they are maintaining the separate records, then definitely they can take the ITC on the material used for the sweet shop. This particular case was with respect to that only. In one floor, there was the restaurant, and in the other floor, there was the sweet shop. So if they are maintaining the same record, definitely the Advanced Ruling Authority also said the same thing. If they are maintaining the separate records, definitely they can take the ITC with respect to the sweet business. Okay. So these were with respect to restaurant services. Now we come to taxability of catering services. Now, as I discussed earlier, right now, if we say as on today, the GST rate of catering services and restaurant services are 100% same. But previously, if we can see when GST was implemented, in outdoor catering, GST rate was 18% and full ITC was available. With effect from 1/10/2019, outdoor catering in specified premises, it means the hotels where the room rent declared tariff is 7,500, it is still 18% with full ITC. But in all other cases, outdoor catering is now 5% without ITC. So the tax rate has been reduced and ITC has been taken away. Now here there is a very interesting point which many of the taxpayers have missed. Now we can see that this rate change was from 1/10/2009. And we all know in case of catering business, they used to purchase lots of capital equipment, also lots of furniture and everything on which they usually availed the ITC. So it means after GST was implemented, then definitely they have purchased lots of things up to 39/2019. And on that, lots of ITC was involved, which they must have availed because they were paying the tax rate of 18%. But from 1/10/2019, the GST reduced to 5%. I'm talking about outdoor catering in other than specified premises. So ideally, there was requirement of two major reversal of ITC. One was with respect to capital goods, because whatever capital goods they have purchased, considering the life of the capital goods to be 60 months, the proportionate reversal of ITC was required as on 1/10/2019, because now the GST rate is 5% without ITC. So if you have, say, you have purchased the equipment of rupees 10 lakh, on that you paid ITC of 1,80,000. But by using that equipment, you are supplying services. Previously, you paid the tax rate of 18%, but now after the change, you are paying tax of only 5%. So ideally, proportionate ITC, suppose you already used for 2 years, up to 1/10/2019. So balance 3 years ITC, proportionately you have to reverse, because you will be paying the lower rate of tax. So you have to reverse the ITC on capital goods, considering Rule 42/43, considering the life of the capital asset to be 60 months. One more reversal was required. That was with respect to stock that you were holding on 30/9/2019. There might be so many raw materials where GST was applicable. In case of catering, there are many materials where GST is not applicable, but still there are many dry fruits, you can say ghee, sugar, over there GST is applicable. So whatever stock you were holding as on 30/9/2019, you were supposed to calculate the tax element on that, and you were supposed to reverse the ITC on those materials, because now you will be using those material for supplying the services, which is subject to lower rate of taxation. So you are not allowed to avail the ITC, which you might have availed and you might have also used it. So ideally, you have to reverse the ITC and pay the amount in cash. But very interestingly, almost 19-20 notices has been issued. I personally did few of the notices, but this is the area where even the officer haven't pointed out this point, that the ITC reversal was required for the rate of change from 18 to 5%. So this can be a blessing for the taxpayer, because many of the taxpayer have missed, but at the same time, tax officers have also missed this point in most of the cases. But there was reversal required in this particular case. In fact, this reversal was also required in case of restaurant also, because after 4 months, the ITC, the tax rate was 5% without ITC, but over that period was very less. So amount involvement was, I feel it should not have been more, but in the catering business, there was huge ITC involvement because of so many purchases of capital goods. So this was to be considered, but many have missed this. Next point is in case of catering services, place of supply. Like as I discussed in case of restaurant also, the place of supply will be the location where the services are performed. But in case of catering, the place of supply have bigger significance than in case of restaurant. Because what happens in case of catering, there can be some, say for example, there is one event management company who is organizing an event for, say, for example, ICI. Now that event management company have the responsibility to book the space, to arrange for the catering, to arrange for the sound system, all the other facilities like hotel facilities, traveling facility, logistic, and all. Everything is done by the event management company. Now, the same event management company will charge on ICI for its services, and the GST rate will be 18%. Now, that event management company is receiving catering services from any particular caterer, and that caterer is charging GST rate of 5%. As per the law, definitely we can claim the credit of this ITC of 5%, of this GST of 5% that is being charged by the caterer, because it is specifically mentioned in the second proviso to section 17 subsection 5 clause B, that if any services, even if it is of food and beverages, if it is used for further supply of same class of service, or even if it is not of the same class, if it is a composite supply, like in the case of event management services, it is a composite supply, and one element of that composite supply is food and beverages, then definitely they can claim the credit. So in this particular case, definitely credit will be available for the recipient. And if credit is available, then it make difference whether the supplier is charging C and S or I. That has to be properly taken care of. Otherwise, recipient will be denied the credit if it is not charged properly. So here it can make a difference if it is an intrastate supply or interstate supply. One more important difference over here is whether it's an intrastate or interstate, it depends on the location of the supply and the place of supply. In case of restaurant services, what happens? The location of the supplier and the place of supply will be in the same state, assuming the restaurant has taken the registration in the state where the restaurant is located. But in case of catering services, there is a possibility that a caterer is located in Maharashtra and he is giving catering services in Gujarat. And if a caterer is located in Maharashtra and giving catering services in Gujarat, he is not required to take registration in the state of Gujarat, because from there he is not providing the services. He is providing the services from the state of Maharashtra, but Gujarat is his place of supply. So what the caterer can do from Maharashtra, he can straight away raise the IGST billing. So caterer will raise the IGST billing stating the place of supply as Gujarat, and it is allowed. And if there is an event manager in Gujarat, definitely he can claim the ITC, provided he is using the catering services in the event management's outward supply. So here it will make a difference. Previously, I told in the case of restaurant services, whether they charge IGST or C&S doesn't matter. But in this case, if sitting in Maharashtra, caterer would have charged C&S, then there would have been loss of ITC to the event manager. So in this particular case, it is very important to check whether the right tax has been charged by the caterer or not. Okay. Now, if we talk about the eligibility of catering services and the restaurant services, as I was discussing also, for the recipient, we can see it is specifically blocked. We can see Section 17, subsection 5, clause B, food and beverages, it is blocked. Outdoor catering, it is blocked. For the rest, we are not concerned in this session. So food and beverages and outdoor catering, it is blocked. But if we read the proviso, what the proviso say, that person for making an outward supply, you can see it is marked in blue, taxable supply of the same category of the goods or services or both, or as an element of taxable composite supply or mixed supply. As I took the example of event management, in case of event management, the inward supply is catering for the event manager, and that is one of the element of composite supply, then definitely the credit is not blocked for the event manager. So one more point, whether the credit is blocked or not, that has to be checked from 2 points of view. One is from the rate notification, because in case of many entries in the rate notification itself, it is written that credit should not be taken. And the second is Section 17, subsection 5. So these are the two checks for checking whether the credit is eligible or not. Now, very interesting, if credit is denied in both these, in the rate also, in the 17.5 also, definitely you will not get the credit. In fact, if credit is denied in any one of the two, then also you will not get the credit. So for taking the credit, it should be eligible as per the rate notification. It means there should not be any condition attached in the rate notification that you can't claim the credit. And secondly, it should not be blocked as per Section 17, subsection 5. So these are the two conditions. I have made certain cases, very interesting cases. If we are not getting the credit, why we are not getting the credit, it should be analyzed, whether because of the rate notification or because of Section 17, subsection 5. Let's see. Case 1. Restaurant A not in specified premises. It means the GST rate is 5% without ITC. Procures canned juices, beverages, and ready-to-cook snacks. But when these items were procured, definitely GST was paid on that. Now the question is whether restaurant A will be eligible to get the credit of this. So the answer is no. But what is the reason for this answer? The reason is not 17.5 clause B, but the reason is GST rate notification itself. Because GST rate notification clearly says if you are giving any restaurant services, then GST rate is 5% without ITC. And over there, this relaxation is not given that if you do the same kind of services further, you can take the credit. This is not given over there. Like in case of tour operator services, over there also ITC is blocked. But in the rate notification, it is specifically mentioned if you give the same services further, then you can avail the ITC. So this particular serial number 1 case, here ITC is blocked because of the rate notification. Second, restaurant A located in specified premises. Now, in specified premises, it means restaurant A, for restaurant A, GST rate will be 18% and they will be eligible for full ITC. They also procured canned juices, beverages, and ready-to-cook snacks. So here ITC will be available. The reason is there is no restriction in the rate notification. Why there is no restriction in the rate notification? Because they are not charging the lower rate of tax. They are not charging 5%. They are charging 18%. And in 18%, there is no restriction in ITC. Second, proviso to section 17, subsection 5, clause B specifically allows the credit. Food and beverages are blocked, no doubt. But here, the credit is specifically allowed. The reason being, because these materials and these services are used for the further supply of my food and beverages supply in case of restaurant. Third, Mr. A is providing outdoor catering services to customer. He receives inward supply of outdoor catering services from Mr. B. So he is taking outdoor catering services and providing to Mr. A. Here also ITC not available. Again, the reason is the rate notification, because rate notification clearly says if you are charging GST of 5% on your outdoor catering, you are not eligible for any credit. Last point is Mr. A is providing event management services as a composite supply to the customer. Inward supply of Mr. A include outdoor catering. Okay. Now, inward supply is outdoor catering. What is outward supply over here? Outward supply is not catering. Outward supply is event management services. And there the GST rate is 18%. There is no restriction of ITC as per the rate notification. And if we come for the second check in section 17, subsection 5, over there it is clearly mentioned in the proviso that if the inward supply is used as a whole for outward supply or even as an element of composite supply, then definitely you will get the credit. So here, if it is the inward supply of outdoor catering, definitely the event management services, they will get the credit of this. Now, I again take you back to the lounges. Over there, what I discussed, when I go to the lounge, they will give me a bill of around 2,000. Say, for example, they are giving me invoice of accommodation services. Now, they are giving me invoice of accommodation services, but that contains composite supply, which includes accommodation as well as food and beverages. Both are included. Now, when the lounge itself is purchasing those food and beverages, whether they will be getting the credit of these food and beverages or not. Now, again, we have to check. In rate notification, it is not restricted because the rate that we'll be using in lounge is 18%. There is no restriction. And again, section 17, subsection 5, clause B specifically allows the credit because these food and beverages are one of the element of composite supply that is given by the lounges. So in this case, also they will get the credit. Okay, so these are the different cases. Now, there is one more example. Suppose if any restaurant is there, it is providing restaurant services and it is providing also sweet sales. In both the cases, GST rate is 5%. Now, but in case of restaurant services, it is without ITC. And in case of sweet sale, it is with ITC. Now the question comes, can we take all the common ITC? Whatever is the common ITC, are we eligible to take the full credit of common ITC because all the supplies are taxable? Restaurant services is also taxable at the rate of 5%. And sweet sale is also taxable at the rate of 5%. Usually, we need to do the reversal of common ITC when there is some exempt supply and as well as taxable supply. then we have to find out the common credit and we have to do the proportionate reversal as per rule 40. But in this case, all are taxable supply. So many might think that there is no requirement of reversal, but friends, there is requirement of reversal. We have to reverse the common ITC because in the rate notification itself, it is very clearly mentioned in the explanation number 4 that wherever GST rate is with the restriction of ITC, you have to assume it as like an exempt supply for the purpose of section 17 subsection 2, and you have to do the common ITC reversal. So these restaurant services, or you can say catering services, all these will be treated as exempt supply only for the purpose of reversal of ITC, or only for the purpose of reversal of common ITC. So this is also the point many of the taxpayers are missing, but they should take care of. So all these are the points with respect to catering and the restaurants. I think now it's the time to take over by Umang for the hotel industries. So if there are any questions, we can take after the session. Last 10 minutes is allocated for the question answer session. We'll take jointly, Umang and me will be taking jointly those questions from the viewers. Thank you so much.
Thank you, Manishji. At the outset, I'd like to thank the Indirect Tax Committee of ICAI for giving me this opportunity. It's a very unique opportunity, I must say. And also, I would like to specially thank the Vice Chairman and Chairman for their kind words. Manishji, I think you will have to not unshare so that I can share my presentation.
Yeah.
So quickly, without wasting much time, I'll get on to the subject proper. I'll be taking on the hotel accommodation. What are the current scenarios, the provisions, along with certain issues from valuation to the various revenue models that the hotels have. We will also be touching on the COVID-19 pandemic when a lot of cancellations happened, and with this, a lot of the hospitality industry was hit quite a bit. So how are these transactions to be tackled with? We will take up. Now, hotel accommodation is defined in the rate notification itself, notification number 11/2017. It is in the explanation where they say that hotel accommodation means supply by way of accommodation in hotel, inn, guest house, clubs, campsite or other commercial places meant for residential or lodging purpose, and include supply of timeshare usage rights by way of accommodation. So by whatever we called, if there is any commercial place which is meant for residential or lodging purpose for a which is temporary in nature, then it would fall under this definition of hotel accommodation. Now, going to a bit of history, when GST was introduced, they had come up with a concept of declared tariff, where they said that for accommodation in hotels and inns and guest house, the declared tariff will be used to determine the rate of tax for the purpose of GST, while the transaction value would be continued on which tax is to be levied. But declared tariff is something what was used when GST was introduced to determine the tax rate. Now, what is this declared tariff? Declared tariff includes charges for all amenities provided in the unit of accommodation given on rent for stay, like furniture, air conditioner, refrigerator, or other amenities, but without excluding any discount offered. So when till October of 2019, declared tariff from 1000 to 2499 was at 12%, below 1000 was exempt, 2500 to 7499 was 18%, and above 7500 was 28%. Now, this used to cause a lot of issues. One being, what is to be used as declared tariff? So, what amount is to be taken for declared tariff? So, one example you can take is, when you go to a hotel, the person standing at the desk, behind him, there will be some rate. That will be the declared tariff for the hotel. But it is quite possible, if you look at the website, there may be a separate rate. So, the the GST department had to come out with a TRU where they said, or an FAQ where they said that whatever is the highest, that is the declared tariff which you need to take. Now there can be a scenario where my room tariff may be 900, but because of an additional extra bed, it is crossing say 1000 rupees. In the FAQ itself, they also mentioned that because the tariff rate is at a specific, you have to pick the rate for that tariff. So in the example that I gave, even though the answer is crossing 1000, the GST rate would come to exempt. So this was till October of 2019. After October of 2019, they changed it to value of supply, where they said that if for supply of hotel accommodation having value of supply of a unit of accommodation above 1000 but up to or equal to 7,500 per unit per day, it will be 12% and ITC would be allowed. If it crosses 7,500, then it is 18%. Now, this exemption of 1000 is withdrawn with effect from 18th of July 2022. So this concept of declared tariff no longer holds relevance for hotel accommodation. But as Manishji was saying, it holds relevance for restaurants to determine whether it is a specified premise or not, even for outdoor catering. So the concept is now basically, as we stand today, it is 0 to 7,500, 12%, 7,500 and above, it will be 18%. Something that I failed to mention for declared tariff was that even if there are different declared tariffs for different seasons, then each season you have to pick those, take that as the declared tariff. Now we come to place of supply. Place of supply here is very specific in section 12, where it says services directly in relation to immovable property, lodging, accommodation by hotel, inn, guest house, homestay, club or campsite. Then it is the location of the immovable property or where it is intended to be located. So in normal parlance, we will always say that it is always going to be CGST and SGST. In a normal scenario, it is always going to be CGST and SGST. In what scenario can we say that IGST is to be levied? Now, let's say accommodation is provided to someone who's come from an SEZ unit. Can we say that because of section 8, this falls outside the purview of intrastate supply and SEZ enjoying a special feature where it says it is deemed to be an interstate? Can we say that in these scenarios it is to be an IGST supply? We have a circular number 48, which was issued by the department, where it clarifies that services of short-term accommodation, and this is also extending to conferencing and banqueting, provided to an SEZ developer or an SEZ unit shall be treated as an interstate supply. As against this, we have a contradicting AAR by the Karnataka Advanced Ruling Authority, which held exactly opposite, saying that even though it is in SEZ unit, it cannot be said that this is an interstate supply. So I am taking an example where the hotel is located in a domestic tariff area and people from SEZ are coming to stay for certain time at this hotel. Now, the second question logically would come is that can you say the benefit of zero rating would be available to the hotel? The circular also clarifies in this aspect, and I believe even after the amendment to section 16, this continues, is that supplies to SEZ unit shall be zero rated and the supplier shall be eligible for refund only if such supplies have been received by the SEZ unit for authorized operations. If this hotel accommodation service was provided to the SEZ unit and the SEZ unit can prove that it is for authorized operations, then the benefit of zero rating will be available. An endorsement to this effect shall have to be issued by the specified officer of the SEZ in a way that the invoice may be stamped with the authority of the specified officer. Now coming to some issues One of the issue for valuation we can take is tips. Now, you will notice when you go to a hotel, there is always this donation or a tip box which is kept. Can this tip box be subject to tax? Can this be subject to GST? Whenever a tip is voluntary in nature, then it cannot be subject to GST. See, I cannot use this word which we use in income tax out of love and affection, but there is no element, there is no reciprocity when you give a tip. It is given out of your own volition, and therefore it is voluntary in nature. Whenever such tips are voluntary in nature, it cannot be subject to GST. But what if it is mandatory? Taking slightly going into Manishji's territory, let's say when you go to a restaurant and service charges are added at the end of the invoice. Of course, after the Supreme Court judgment, you can object to this. But in case you don't object to it and it is added, this is mandatory and would be subject to the GST scheme. Therefore, anything which is mandatory will be liable for GST. But if it is voluntary in nature, there is no reciprocity, then the question of levying GST does not arise. This may be also true when you go to the hotel, when you're at the reception, you are swiping your card, and while swiping the card, you add say 10% tip. This is out of your own volition and therefore should not be subject to GST. In a case where this tip box collection is collected, some portion is retained by the hotel and the rest is distributed amongst the staff. To the extent it is retained, in my view, it should be subject to tax. Now, coming to certain other issues, what about the discount offered? Now, say there are certain block bookings done, say a corporate discount is given. These airlines which are there, they always have deals with several hotels which are in and around the airport, where the airline staff, may it be pilots, may it be the air hostess, they are required to go and stay there for their mandated rest period, and then again go to the airport for the next shift. So where in these scenarios, the airports generally have a commitment with the hotel where they enter into a rate agreement saying, I will buy say 200 room nights from the hotel. Hotel will sell these room nights at a specific rate. Say when you and me as a customer go, they may be selling it to me at 6,000 rupees, but when they give it to the airline, it may be at 4,500. As you know, GST is on transaction value, where if price is the sole consideration, GST needs to be levied at that transaction level only. So even if these corporate discounts are given, whatever rate at which it is given and price is the sole consideration, whatever amount it is given, GST is to be levied on that amount. So for 4,500, tax will be levied at 12%. Say for me as a customer, when I go, it is levied at 8,000, then I'll be levied at 18%. What if it includes free breakfast? Or there are these meal plans, American plan, European plan, continental plan. In one, we have only breakfast included. In the other, we may have breakfast and one meal included. In the third one, we may have all meals included. What is this? Is this an element of a composite supply? Are they naturally bundled? My answer to this would be yes. They are generally naturally bundled, and the price that I charge would always factor in this price. There is no free luncheon in this world. Just writing free breakfast does not mean it is free. It is always considered as a part in the price. I'll give you a small example. When you go online and go to say booking.com, when you book, you may have multiple rates for the same room type. It may be a suite without breakfast, say 6,000 rupees. With breakfast, 6,500 rupees. So there is nothing free in this world, and if it is part, it is a composite supply and therefore would be taxed, where principal supply would be of accommodation. Here we need to understand the dominant intention test and what was set by in Gannon-Dunkerley case. Always this dominant intention test comes into play in GST. When during service tax and VAT, this had kind of taken a hit, but now this has revived, and dominant intention would always go in force the customer always is going for accommodation and not for the food. So the dominant intention test would always hold true. What about any service charges? See, it may include free airport, pickup, drop. These are all ancillary services to my accommodation service and would continue to be a part of my composite supply definition. So it would be taxed at with principal supply be accommodation service. Now these hotel, they have other revenue streams also. They have these small shops which they may give on rent. They have certain space which is allocated for a vending machine. All this is giving something on rent, a space on rent, and is to be taxed at the rate on which this it is to be taxed at renting of a place. So renting of shop, vending machine, all this I believe comes under the 18% bracket and cannot be clubbed into this accommodation fee. The valuation for or the consideration for it may be in different parts. So for vending machine, it may be say a fixed price and a percentage of sales made during the month. These are all just valuation mechanism, but it continues to be a renting of space service. Then we have certain advertisement income. There may be standees, there may be say a Visi-cooler or a say a Coke ad, something like that, which is kept around in and around the hotels. So this is all advertisement in nature and would be accordingly taxed at the rate on which advertisement is taxed. Now we have a conducting license. The hotel may sometimes appoint a caterer where they give a conducting license to the caterer to run the restaurant. In this case also, I am giving a right to use to the caterer and would be taxed accordingly. Like I said, for vending machine also, here the consideration may be in different parts where it was something may be fixed and something may be a percentage of sale, gross sale, which may be made. Now coming to these aggregators, where there are certain room nights which are bought out directly by the aggregator, or the aggregator earns commission. So let's take an example where we have hotel.com, where it says I will, and it goes to Taj and says I am buying 200 room nights. You have to make available 200 room nights to me whenever I ask. This is a principal to principal transaction where even if the room goes unsold by the hotel.com or booking.com is not relevant to the hotel. The hotel has already sold off this room to the aggregator, and therefore it is a principal to principal transaction. But there may be another case where, let's take Make My Trip, where Make My Trip earns a commission for each booking done through its website. Now these are two separate sale transactions or two separate transactions which are happening. One is the room to the customer and one is from the Make My Trip to the hotel, where Make My Trip is charging agency commission, and accordingly this will be an inward service or input service for the hotel. So the contract needs to be examined very closely to determine how this needs to be viewed. Let's take an example. I was discussing this where room tariff was 900, extra bed was 150, and we have room service of 400. Let's take first the scenario before value of service, before when it was based on declared tariff. Now when it was based on declared tariff, since declared tariff was 900, which is below the exemption, then this room of accommodation would be eligible for accommodation, and therefore 900 and even 150 rupees, which is a composite element to the room tariff, would be added and no tax would be levied. What about room service? Now room service, see, you need to understand, when you enter into a contract with the hotel, it is always for accommodation with certain things like accommodation, breakfast, and say an additional person. I am 3 people coming for the accommodation, so an extra bed. That is always the case. You don't know today when you're booking the hotel room that you're going to call for room service. So that is always going to be a separate contract, and room service will be taxed accordingly based on the restaurant service rate and not based on the accommodation. It cannot be clubbed. Anything and everything which was part of my first contract or original contract and is naturally bundled can only be considered where accommodation is the principal supply. Now let's take the other example where room tariff is 12,500. We have laundry of 150 rupees, room service of 385 rupees. We have minibar consumption of 500 rupees, and we have use of business center at 2200 rupees. How is this to be taxed? Now, if you look at it, room was already part of the first contract. Never see in the contract, they will always write that laundry, room service, minibar, everything will be charged extra. But that does not mean that it is to be taxed at the rate of accommodation. Laundry, according to me, is a separate entry. You call for it, you enter into a separate contract with the hotel saying that boss, please come and do my these two shirts for me. So it is to be taxed separately and it would be taxed at 18%. Similarly, for business center, all this would be taxed at a different rate at 18%. The minibar, according to me, would be like sale of goods. And even though MRP may be say 10 rupees for the juice, the hotel generally charges you say 50 rupees. It is sale of goods and accordingly would be taxed at the rate of each and every good. Now we come to membership program, where these large hotel chains, they run a membership scheme where they say you buy say today with 20,000 rupees, you get a 1 year membership where you have 2 days free stay, 2 nights free stay, some discount on food or one free meal, and you get an extra cake. Is this akin to accommodation service or is this akin to a membership service? See here, in membership space, generally you get other perks as well. Like you may get 20% off on spa treatments, you may get access to gym. So this is nothing but a membership program and should not be considered akin to an accommodation service and be taxed accordingly. Therefore, according to me, this is at 18% and should be charged at the rate of membership service fee. Now coming to ITC, let's take each and every item of this separately. We have certain consumables like bottled water which is kept in the room. Will the hotel get ITC on this? My answer to this is yes. This is used as an input goods for provision of my output service. So this is an eligible input. Even if you were to say that water is a beverage, like Manishji was explaining, this would form part of my proviso to 17(5)(b), and therefore it forms part of my outward supply and therefore should be eligible for credit. Now coming to certain capital expenses like linen, carpets, any cutlery or serveware that we have in the room or furniture fittings, all this credit is also eligible to the to the hotel, and he should be eligible to claim it. Now coming to a very interesting aspect, land and building and improvement on these leasehold premises or certain repair and renovation which is done for the hotel. See, these hotels keep on, they have, because of such a high turnaround, they need to keep on renovating themselves. Here is where section 17(5)(c) and section 17(5)(d) comes into play, where works contract to the extent capitalized is blocked, and therefore any expense which leads to an improvement in the leasehold premises or improvement in the land and building, where the auditor would ask the hotel to capitalize these expenses will be blocked and would not be eligible for input tax credit. Of course, we await the decision of Safari Retreat, where an argument may be done to this aspect, but as it stands today, as per the act, these credit may be blocked. Then we come to repairs and renovation. To the extent capitalized in building will be blocked. But if it is put in the expense register in your P&L, then there is no blockage and you should be, even if it is works contract, you should be eligible for the credit. So if there is say some small carpentry work or some small renovation which happens in the hotel, which is expensed out, then also this credit would be available. Next, we come to certain decorating, artifacts. All these things would also be logically available for credit. There is no bar for the hotel to take credit on this. What about a delivery van, or let's say a pickup drop van that the hotel has kept? Would credit be available? My answer to this is yes, credit should be available because it is being used in passenger transport. In a way, it should be eligible to you and it forms part of my outward service. What about delivery scooter? Is scooter a motor vehicle? So this is slightly going into Manishji's territory, but scooter falls under the Motor Vehicle Act, and therefore if it is used for food delivery, for restaurant, for outdoor catering, then it should be blocked and no credit will be available. But what about these small electric scooters that we have, the smaller ones, which if you recall, you see these Zomato, Swiggy people who are using, they are not required to be registered under the Motor Vehicle Act. If they are not registered, then it is falling outside the blockage of 17.5 and therefore should be eligible. Now coming to common expenses for hotels and restaurants. So let's say there are auditor expenses or certain advertisement expenses, certain expenses which are common in nature, where you have a hotel and below the hotel you also have a restaurant. These common expenses, like Manishji was saying, would be subject to a ratio disallowance under section 17.2, rule 42 and 43, and accordingly you will be eligible for credit qua the taxable services and for common services to the extent of these taxable services. So you need to be very wary of this, maintain books accordingly for common services and apply the ratio. Now coming to a COVID-19 kind of a scenario, I have kind of created a case study on this, where during the pandemic, a lot of these tour packages within outside India got cancelled. I am taking a tour package here so that we can discuss the hotels and a bit more in detail. So we need to discuss the GST implications from the output side and from the input side. Let's take a scenario where the tour operator has cancelled and is offering a full refund to the customer. In this case, what is to be done? Generally speaking, advances were received by the hotels or by these tour packages, and GST on the same was already discharged. How is this to be tackled? Now we have a circular number 137, which deals with this scenario, which came during the April of 2020 during the COVID pandemic. And they said that in case an invoice is not issued and GST is already paid on the invoice, on the advance, since service has not happened, the service has not fructified only, there is no service, then the question of GST cannot arise. And therefore what the taxpayer must do, or what the hotel or tour operator must do, must issue a refund voucher in terms of section 31(3)(e), and if possible must apply for refund under excess payment of tax through form GST RFD 01. Now what if an invoice was also already issued and GST was also paid? In this case, they need to issue a credit note in terms of section 34 and need to, if possible, adjust it against a certain future liability in their GSTR 3B. But what if there is no output liability in the 3B? If there is no output liability to be adjusted, then they can apply for refund under excess payment of tax. Now this is in a case where the entire tool is cancelled and full refund is given. What about a case where the customer is cancelling and as part of the contract, some portion is retained? Let's take a scenario where you had booked a tour for 1 lakh rupees. As per the contract, it said that if you cancel the tour before 1st of say April, then you get full refund. When you cancel from 1st of April to 20th of June, then 80% would be refunded and 20% would be retained. and if you cancel after say 20th of June, it is fully retained. In this case, what is to be done? Is GST to be paid on the retained amount? On the refunded amount, of course, we have this circular, we can take use of this circular. But what about this retained amount? Can you say there is a service, or is this akin to liquidated damages? We have a very interesting case in terms of Lemon Tree, which is a Sestet Delhi judgment, where Lemon Tree had received advance from customer on booking of hotel room. There was a cancellation of the booking, and as per the contract, the entire amount was forfeited by the hotel. The question before the Delhi bench was whether service tax is liable on the amount forfeited by way of cancellation charges. The tribunal held that the customers pay an amount to the appellant in order to avail the hotel accommodation, and not for agreeing to the obligation or refraining from an act or to tolerate an act. This cannot be said to be providing a certain service. The hotel cannot be said to be tolerating the customer not coming, and therefore this is akin to a damages, and this is in a way making the hotel whole, and therefore no service tax is to be attracted on it. I believe this premise continues in the GST era also, and for the percentage which is retained, this is in nature of damages, compensatory in nature, and should not be leviable to GST. Then we come to another scenario which happened during the pandemic. Was no refund was given, but a document was issued which said that in the near future you can use this against a future supply. Is this document akin to a voucher? We have voucher which is defined under section 2118, which says it is an instrument where there is an obligation to accept it as a consideration or part of the consideration for supply of goods or service, or both, where the goods or service or both are to be supplied, or the identities of their potential suppliers are either indicated on the instrument itself or in related documentation, including the terms and conditions of use of this instrument. Now, if these documents are in the nature of voucher, we need to look at the time of supply of this voucher, and the time of supply, if the supply is identifiable at the point of issuance of this voucher, then it is to be paid on the date of issuance of this voucher. If it is not identifiable at that point, then it is a date on redemption. Now, there can be two scenarios where it is only related to a flight, for example, where Indigo gave these vouchers, then supply was identifiable at that point, then it would be on the date of issuance of voucher. But if it is a hotel, where it may be used against the hotel accommodation service or at the restaurant of the hotel, then it is possible it is not identifiable at that point in time, and therefore it would be at the time of supply for issuance of this voucher would be date on which the voucher is redeemed. So this was on the output side. What about on the input side? The hotels gave a credit note to be utilized in next financial year, but not cash refund. Same thing for the tour operator, same logic for the voucher. This is to be used against a future supply, and therefore nothing is to be done. But what about a tour operator is opting? Now let's take an example where tour operator was opting to discharge tax under GST 18%. On cancellation, all bookings which were made by the tour operator, such as car booking, hotels, etc., were forfeited, and no credit notes were also issued. The tour operator approached the insurance company that they need to reimburse the tour operator for whatever loss it had endured, for the loss due to the cancellation. Now one question which arises is, this ITC which you had already availed, because these invoices are already issued to you as a tour operator of the car booking, of hotels, and all these credit, is credit eligible to you? If you were to look at section 16(2), it's one of the conditions says these services or goods or service needs to be received. can you say that you have received these services? Yes or no? There is certain doubt here. According to me, it should not be eligible, but there is an argument to be made where the argument done is, say when you change from a composition scheme to a normal scheme, what credit is allowed to you by the statute? Whatever is left with you or whatever is lying in the stock, no, never the credit belonging to services are allowed to you from composition to taxable scheme. Similarly, when you go from taxable scheme to composition, you only have to reverse credit pertaining to the goods lying in stock. The assumption by the department always has been that the service is consumed on the day of receipt of the invoice. So when you talk of insurance, prepaid insurance or Wi-Fi for the entire year you are paying today, you are availing the credit today itself, and you are not taking credit in the benefit that you are accruing over the entire year. And therefore an argument can be made saying that just because I have not technically received the service, the benefit is not received by me, that I should be required to reverse the credit. This is slightly litigative and I believe it should be reversed, but this is just an alternate stand that can be taken. So we discussed about this circular 137. This is also essential during normal course, where in case a cancellation happens, you can use benefit of this circular and apply for refund, or in the case adjust against your future liabilities. Now let's talk about a little efficiency in ITC management. I believe we can conclude in the next 5-7 minutes. So Manishji, we can take questions after that. I think we have 15-17 minutes to then do the questions. Efficiency in ITC management, how I'm trying to look at it is this. Like we were saying that hotel, the place of supply is always going to be the location of the immovable property. Now let's take a scenario where you are located in Maharashtra and you need to go for an audit assignment in Delhi. Of course, when you book the hotel in Delhi, the Delhi guy will levy CGST and SGST of Delhi, and this credit will become a cost to you when you go on this audit assignment. Is there a way that we can efficiently manage this credit and be eligible for the credit? One way to do it is to appoint a local tour operator in Delhi. If the local tour operator is located in Delhi, he will be eligible for credit because if he is paying tax under 18% here. So if he is eligible for credit, he will take credit of those hotel and pass it on to us when you book the hotel, or when you book the hotel and conveyance in Delhi. So this can be used. Of course, you are paying certain extra amount over and above for the services of the tour operator, but in a way you are saving a lot on this credit, and this credit will be eligible to you. So this is how you can efficiently manage the ITC on this aspect. So hotels we discussed. Today as we stand, declared tariff only is relevant for determining specified premises for the purpose of restaurants or for the purpose of outdoor catering, but no longer is relevant for hotel accommodation. Hotel accommodation is purely based on value of supply. If there is certain naturally bundled services like breakfast or certain pick-up drop services, which is part of the main original contract, then it can be considered as a composite supply of accommodation where the rate of accommodation can be levied. But for other specific services which you avail at the time of stay, which may include laundry service or business center services, these are separate services which are received by you and would be accordingly taxed separately by the hotels. Then we come to ITC. ITC is eligible to the hotels Of course, to the extent of your restaurant service or outdoor catering services, if you are providing both, to the extent of common services, you need to apply a ratio. But other than that, you are eligible for credit. Of course, you may be hit by 17.5C and 17.5D with related to works contract to the extent capitalized. So when you do the accounting for and you check the hotel, when you're filling these returns, you need to be careful of these capital expenses done by the hotel. Cancellation to the extent which is part of damages of my contract will not be subject to GST, and it needs to be treated accordingly. And there is a way in which you may efficiently manage ITC. With this, I think we can open up the floor for questioning. I'll just stop sharing.
Should we carry on with the questions, sir?
Yes, thank you both the speaker Manish ji and Umang ji for taking the session in detail. And I hope the viewers must have been benefited by this. Just I'm opening the question box.
Yes, sir. Thank you.
Welcome. We have received so far 55 questions. From Hyderabad, one gentleman is asking, what is the GST on pre-packed item? Example, water bottle. Who want to answer?
Yeah, I am understanding this, that pre-packed item is being served in the restaurant. I am assuming he is asking from that point of view. If it is served in the restaurant, it will be treated as a restaurant services only. But if it is over the counter somewhere else, then as per the GST rate of the product. But if
Sir,
it is restaurant,
yeah, go ahead, sir.
Yeah, like there was one case, a banana was also served in the restaurant, then the GST rate was 5%. Even that banana was exempted. Still, the GST rate of restaurant services will be charged. So irrespective of the product rate, GST rate of the restaurant services will be charged.
Sir, I think I would like to add just one thing. There is a fine line between supply of food and service in restaurant. You take a biscuit and you sell it over the counter, it is supply of goods. But the moment the same biscuit is opened and given on the table of the restaurant, it is supply of service. So that is how you look at it. A small example,
But
I think. Yes, sir.
Umang ji, if even the biscuit packet is not open and it is served by a 5-star hotel, it will face the hotel services. It will not be the biscuits rate, whether it is open or packed.
Sir, there is an element of service. So my point was basically where these Irani restaurants and all are there is typically a small shop which is attached to the restaurant where you get wafers and all. So if that wafer packet is sold, then it is goods. While if it is served at a restaurant, that it is service.
The same concept of sweet shop, if we can maintain the data separately and the accounting records, and we can show it that it was a separate shop. Otherwise, it will be restaurant services.
Thank you, Manish ji. Now, next question, it is from Leh. He want to know ITC allowed on car purchased for using a taxi by a hotel. If some hotel has purchased some car and they are using it as a taxi, whether credit will be allowed to them or not?
It will not be allowed if the number of passengers are less than 13. As per section 17, subsection 5. Because all the passenger transport over there is blocked unless the seating capacity is more than 13 or more. And only in the specific cases it is allowed, and this case will not cover in that particular list.
But in the question it is said it is used as a taxi. The hotel is using it as a taxi.
For pick-up drop.
Hotel can use for pick and drop facility.
If it is used as a taxi, they may be charging for providing the service. It is not so that they are providing free services. If it is free services, definitely credit will not be allowed because the passenger
Right.
cars are not covered for credit. But if it is used as a cab operator,
If they are charging, and it will be better if commercial number is taken, not the personal number, the private number.
yeah. Anyway, hotel using taxi must be having the commercial number. It
Commercial
cannot have
number.
the private number.
And
So
if they are
according
charging,
to me,
then
sir, it is eligible. It is part of my offering of services and therefore should be eligible.
For a hotel to be treated as a specified premises, the declared tariff shall be above 7,500. Whether the declared tariff to be above 7,500 for the whole year or at the any single point of time in the year.
this will be a litigated question, sir, because generally
That's why
declared tariff.
we have invited the faculties to
Yes,
solve the queries of our members.
because
Unless
declared.
something is of some intelligence is required, simple questions can be taken from anywhere.
Yeah.
So yes, Manishji, I want your views on this.
Yeah, declared tariff should ideally be same, but if it is still changing, then we can contest the period during which we are availing the services of restaurant, or we are considering the specified premises. If in that period, if it is less than declared tariff is less than 7,500, then definitely we should contest that it should not qualify in the declared tariff of 7,500. If it is less than that, we should get the benefit of.
Sir, like I was saying, there is a clarification when this concept was there for declared tariff earlier. There they have clarified and they are aware of the fact that during seasons, there may be different declared tariff. According to me, whenever that declared tariff crosses, after that point in time, you become a specified premises. That triggering point for that period. So let's say in December when there is Christmas and you, for your presidential suite, you decide that my rate is 8,000, declared tariff is 8,000, then according to me, from that period onwards, you become a specified premises.
But in case of hotels, they get generally off-season discount instead of charging premium on the peak season. So declared tariff is the fixed, and over on that they give the discount during off-season and the lean season.
I understand, sir, but I'm just saying, see, there may be also a scenario where for the season it is high and then again they come down when for, like you said, off season and all. But once you cross it, I believe for that period, for that year, then you will be obligated and there will be no way out if it is increased and then decreased.
Okay. Now moving to the next question. It is specifically Diksha from Delhi want to know from Umang only. Hi Umang, I have a query with respect to membership income and freebies. Membership invoice will be raised as per the HSN applicable to the membership fees and the respective tax rate. But how to go about the free cake, one complimentary room night, as mentioned that no service is free, but a part of package or price itself, what treatment for the said cake and complimentary room nights.
Okay, so I would like to respond it in this way. You are paying for the room nights, for the food, for the cake. It is just a way to advertise that I am giving you membership. And just so it's like today you are pre-buying something for the future. So when you buy membership, we'll charge membership subscription fee, say 20,000, on which you are paying 18%. You are, because of that membership, you are eligible for 2 free nights. So there will be no invoicing per se. It was part of my original membership. But then you will say, what about my spa treatment? I am getting 20%. It's just because you see, price is the main sole consideration. I am a member, that is why I am getting additional discount. It's like when you go to a club member, when he rents a hall, gets at lower rate. When outside person comes to the club and books the hall, he gets higher rate. It's just they are specified people who are getting benefit. Manishji, if anything you want to share.
The consideration is the membership that they have taken in advance.
Yes.
So it's not free.
So what will be the tax rate? Well, that is the issue, no? Basically, it is part
18%,
of
sir.
which, whether cake and the room, complementary room, they are not billing, but they are providing. So, which HSN to be taxed it is? Basically, the SSC code.
Membership HSN code will be levied and at 18%.
And they're getting the right to acquire the room at a later date. Right
Correct.
now, they are getting the right.
Next is the Anirudh Sonpal from Vadodara is asking hotel whether ITC is eligible on the centralized AC system, lift, busy system, etc. So three
Good question.
items he has mentioned, then after he has mentioned ETC. I think you have to elaborate the ETC also here.
So, see, according to me, to the extent capitalized is the word, but then these hotels, you consider AC as a plant and machinery for their services. So, the moment you consider it as plant and machinery, according to me, for the AC, you should be eligible for credit. Then, sir, what was the other?
Lift. For the lift also, we can take it the credit, but there are some adverse ruling on this particular
Yes,
lift. But ideally, it should be contested and we should claim the credit. Even the lift can also be dismantled and can be relocated at some other place. I have seen this practically, it is possible.
correct, sir. So lift also ideally should be there, but we have cases which have been held
Adverse
against,
cases.
which have been held against. And lift.
Don't you consider that lift is now a settled issue after the Supreme Court judgment?
Pune. Sir,
So whether lift will be credit of lift, so one should venture into taking credit of the lift and go to travel up to the Supreme Court, whether it is advisable. Because any judgment of any high court or tribunal or any other authority will not help you till this Kone elevator judgment is available.
Sir, conservatively, what I'm seeing practically is hotels for lifts, they are not venturing as much, but for ACs and all, they are taking.
The word used here is centralized AC.
Yes, centralized AC is also movable, sir.
Also, sir, covered. Sir, plant and machinery.
And plant and machinery also, right.
So what I want to add here for our participant, that if a plant of the AC may be considered as movable, but the ducting and all this will be cannot be reusable, I believe. So they should capitalize in two parts, and I think they can avoid the dispute.
Yes, sir.
They also, third point was here whether about the generator set.
Generator set, it's quite eligible.
Eligible, sir. No problem.
And who wish to elaborate this ETC?
ETC.
Basically, let me
Electrical fittings and all.
Jumped in. Basically, the person want to know what type of things credit should be allowed and what credit should not be allowed. Basically, whatever we form part of the infrastructure, that is the infrastructure of the hotel, the superstructure of the hotel, credit of that will not be allowed. If it is movable, easily dismantled and can be relocated without damaging to the equipment or plant or machineries, then it is movable and credit can be taken of that. Like generator said, if it is easily movable, no damage will be take place if you move a generator set from one place to another place. So this is the criteria. Suppose that you have a panel has been fixed on the wall, then no credit will be allowed. Similar, there is a bed lying in the hotel room. You can move that bed if it is not fixed to the wall without damaging it. So credit is basically dependent on whether it is part of the superstructure or it is a movable property which is segregated from the infrastructure itself. Somebody is asking very interesting questions. I never come across such type of question, but still when somebody is asking, it generated my interest he is asking this 7,500 for double occupancy or single occupancy.
It's a room rent.
Sir, per unit per day is what is written.
Yeah, it is per unit per day. So even if the tariff is 7,500 for double occupancy, they have said that double occupancy. It is, they have not mentioned. They have mentioned in the room tariff. If room tariff for double occupancy is separate and single occupancy is separate, then you have to go according to that. That if single occupancy tariff is less than 7,500, then different treatment, and double occupancy, or they may have same. It is all depend upon the tariff. It is not the occupancy which will decide the taxation. The tariff will decide the taxation. And Nissanji from Pune want to know whether credit will be available for procurement of local goods and services Gujarat when the caterer is registered in Maharashtra but are supply made in Gujarat.
But caterers are now not getting the credit.
Caterer are not allowed, but in a similar type of situation, basically he is saying a person who is registered in Maharashtra and traveling to Gujarat and providing services in Gujarat and procured some services locally from Gujarat, whether he will be eligible to take the credit.
Then he have to bill it in the state of Maharashtra and then give a delivery challan that he have bought the goods for consuming in the state of Gujarat, provided he is eligible for the credit.
Umangji, you want to say something here?
No, sir, I am in agreement. It will be like a bill to Maharashtra, dispatch to location, site location.
Delivery challan has to be, it's a different state. So we have to make a delivery challan because these materials are consumed in the state of Gujarat.
So, my friend, it is all dependent of the place of supply of the procurement. If it is a goods, definitely you can say that it is a place of supply is your registered place and you will taking goods there and using it in Gujarat by way of delivery challan or something. But if it is a service which is dependent on the place of supply, and place of supply is, if coming in Gujarat, then the supplier will charge CGST and SGST. Once he charges CGST and SGST to be because he is a supplier who is in Gujarat and place of supply is also becoming Gujarat, then he will charge CGST, SGST, and credit will not be allowed to a person who is coming from other state and providing services there. For that purpose, yes, please.
Sir, if amount is significant, we can take a casual taxable person registration.
We got it. Basically, we are not discussing the quantum, we are discussing the procedures. So what I thought I should add here, if it is the place of supply will become in Gujarat, then this Maharashtra registered person will not get the credit. For that purpose, he should take the registration, as Manishji has correctly mentioned. Whether training and food are composite supply to claim input tax credit. Whether training and food are the composite supply to claim input tax credit.
I think they are trying to say
we have to identify which is the principal supply then. And if principal supply is training, then we can.
I think this particular gentleman wished to know that if you are attending conference of ICAI physically and some fees has been paid, and where you will get food as well as training.
We can get the credit.
So whether the training and food then in that case, if any supply, food and beverages are used as part of a composite supply where you are paying the taxes and it is not specifically restricted, then credit will be allowed to you, including the food. That is specifically said that if it is part of a package or composite supply, credit is not restricted. Whether caterer can charge 18% GST with ITC in outdoor catering in other than specified premises?
No, it is not allowed. And there is a judgment also in this particular case. Because even in the residual category of food and services, it is mentioned over there, if condition of specified premises is not fulfilled, then we have to go with the rate of 5%. without ITC. And there was a judgment. I don't know the name of. Coffee Day Global Limited.
रेडी हो गया सर, भेज दूं? रेडी है तुम? हाँ. Umang ji, you want to add something here?
No,
Or
sir.
You agree with the
Manish
Manish ji?
Agreed, sir.
You agree to this that catering service cannot charge full rate of tax and take the credit.
Sir,
They have to go by the.
Sir, if you
Yes.
read the rate notification, there is a mandatory in part number 6, I believe there is a mandatory requirement saying that unless and otherwise it is specified, they have to mandatory apply. I'll give this logic that for goods transport agent, there is an option given. While for restaurant, they are mandated. So wherever they want to give option, they have given. I cannot go just skip and say I want ITC, therefore I take 18%. So I agree
Okay,
with.
so we already touched the arm of the clock 7, and but I want to take this last question because it is dessert, and in the end we can discuss about the dessert. They're asking ice cream alone billed in restaurant. What is the rate?
5%, sir.
Umang ji.
5%, sir. If given to restaurant, through in restaurant, 5%, sir.
So what both the speaker has confirmed that if it is in restaurant, it is 5%. It should not be an ice cream parlor.
Yes, sir.
It should not be an ice cream parlor, or then it is 5%. If it is ice cream parlor, then the treatment will be different. Since in the question it was a restaurant, so we consider restaurant is providing other services, other items also, but this particular customer, they have served the ice cream only. So rate will be 5%. So
very interesting thing which was pointed out when I had gone to Mangalore for the training of the officers. They pointed out that now there are certain ice cream parlors who have now started supplying goods as a restaurant, have started doing certain things which restaurant does, and therefore falling under the restaurant category. So it is very interesting where ice cream parlor now has been converted into a restaurant where they are now also serving, say, samosa and stuff like that.
Good idea, but still we have to understand it is a selling of takeaway items or they are serving in the restaurant.
Yes,
that is
sir.
also a consideration, a point to be considered. So thank you both the speaker, Manish ji and Umang ji, for taking our accepting our invitation and being here, and lucidly cover the topic and also answer the questions which we have taken. Other questions which are not answered, I will request the faculties to go through it, and if they wish to answer through email, they can route it through office. They will definitely send it to the respective person who is raising the question. And next week, Smita madam is available here.
Yes, sir. Yes, sir. I'm
Madam,
here.
what is the next? Have you finalized the date of next webinar?
Not yet, sir.
Well, not yet. Next week webinar is available or not, you will come to know through our communications. Right now, we have not got the confirmation from, because it is the ICI platform, and whenever we are organizing a webinar, we have to check it out whether other committees or other programs are not lined up at this particular point of time. If it is lined up, then we have to shift our slot for the webinar. So viewers have to watch our communications or the website where we communicate regularly. And today we had 1,200 participants. Thank you everyone for joining.
Thank you so much, sir, for inviting us.
Thank you, sir.
Thank you, office also, under the leadership of Smita Mishra madam. Smita Mishra, let me stand corrected myself, and under her leadership, the entire team is working to deliver all these lectures at your doorstep. Thank you very much.
Thank you.
Thank you,
Jai
sir. Thank
ICI.
you for your support.
Good night to all.
Good night.
Thank you, everyone.
Thank
Divya,
you.
Divya, we can sign up for the day.
Yeah.
Divya, we can sign up.
Recording stopped.